This is the Asia Trade. I'm Avril Hong in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. The surge in energy prices easing as President Trump says the US will provide insurance and military escorts if needed for shipping in the Persian Gulf and the Strait of Hormuz. As strikes continue across Iran and across the region, Trump says a new leadership in Tehran may be no better than the old one, adding to questions over US objectives. Also ahead, leaders of Wall Street's biggest private markets. Players warn that investors have reason to be concerned amid a wave of withdrawals.
And I'm Stephen Engel in Beijing, where China's most important political gatherings are about to begin. Officials will unveil the 15th five-year plan, including a goal to spur a significant increase in consumption.
Investors will be keenly awaiting any news headlines coming from that pageantry and political progress going on in China, as we'll get those updates. But at the moment, we are watching ahead of that open of major markets across the region, including some news out of Korea at the moment. We are getting industrial output data, seeing a decline of almost 2%, actually 1.9% month on month. An estimate was for a gain of 0.5%. When it comes to industrial output on a year-on-year basis, we're seeing rise of 7.1%. That is better than expectations of the 3.2% increase there. The January cyclical leading index also rising by 0.7 points there on a month-on-month basis. We have seen, of course, really Asian stocks in particular, some of those tech and AI names trading in the likes of the Korean markets, seeing some gains amidst a broader market sell-off. But it does look like we are seeing a sort of broader shakes as we get into the start of trading in Asia, set to slip as we see oil extending that rally, with the promises and assurances being given by the US administration when it comes to at least the transportation of oil tankers through those key straits. But we are seeing Asian stocks looking to track Wall Street lower. That late rebound in the US session really trimming a broader sell-off there. Oil will be one to focus. We'll be looking at energy stocks in particular when it comes to trading here in Australia. For Aussie stocks, though, we have seen really that improvement in February earnings, signalling what is being called a powerful boost for Australian stocks. So potentially a little bit of an opportunity for diversification for global investors here, Avril.
Yeah, Heidi, we certainly saw that really worrying sell-off in South Korea just a day ago. For now, look at markets, U.S. assets trading the headline as Trump said that the U.S. would escort, insure tankers and other vessels through the strait. We're seeing how oil and gas paired those gains as Trump gave those assurances. Stocks, bonds, they also paired losses. But semiconductors, they were the drag. We even saw oil and gas names part of the sell-off. And it was interesting how even gold wasn't spared. Now let's get straight to the White House and bring in our correspondent, Tyler Kendall. Tyler, we're hearing these assurances from the U.S. president. What details are we getting on them?
Well, Avril, I was actually in the Oval Office today with President Trump, where he actually downplayed the potential for long-term impacts in the oil market. But at the same time, once us reporters left the room, he then posted on Truth Social this bid to help stave off a potential energy crisis due to what's happening in the region. Now, as you mentioned, President Trump said that we would see these U.S.-backed insurance guarantees, as well as the U.S. Navy potentially escorting ships through the Strait of Hormuz, as we got a statement just earlier today from the IRGC via Iranian state media warning that no vessels should pass through the critical waterway. Now, President Trump says that the insurance would be offered through the U.S. International Development Finance Corporation at a, quote, very reasonable price, but did not elaborate on the mechanism that would be offered. People familiar with the matter do tell us here at Bloomberg News that concerns were raised about insurers putting upward pressure on oil prices as insurance contracts were getting pulled. Of course, it's going to be one to watch, including when or if the U.S. Navy does ultimately escort these ships. President Trump says that he'd like to see that happen, quote, as soon as possible.
The comments from the president when it comes to the prospect of new leadership, or perhaps just a new iteration of the old leadership, were really quite interesting, right? Do we have more of an insight into what the U.S. objectives are here?
Well, President Trump said today that the worst possible potential outcome would be if new leadership in Iran was, quote, just as bad as the regime that the U.S. and Israel are ultimately trying to change. We heard President Trump saying that he hopes that a new, more moderate leader would emerge that the U.S. feels that it can work with going forward. Though, of course, we have also heard from the president that the Iranian people should take over their government. It's, of course, a very fluid situation. This administration has outlined various goals, including, of course, they want to see a complete dismantling of Iran's nuclear program, a takedown of Iran's ballistic missile program, but then also ending its support for proxy militia groups in the region. President Trump did mention that some of his top candidates, in his words, that he felt the U.S. government could work with were ultimately killed in U.S. strikes. So it's going to be something to watch going forward.
Tyler, also watching as the U.S. conflict with Iran is well underway and drags on, the extent in which this is going to affect its relations with EU partners, including with Spain. What's the latest on that front?
Well, President Trump today said that he was going to cut off all of trade with Spain after apparently Spain did not allow the U.S. to use its military bases as part of this military operation against Iran. Now, it's not totally clear how this would happen. Of course, Spain is part of the broader trading partnership with the European Union. But the president did go on to say that he could impose a, quote, full embargo on goods from Spain. We're still waiting for additional details there, but it's definitely highlighting fissures between the U.S. and Spain, which we know had been sort of heightening, right? Spain's prime minister had pushed back against President Trump's stated goal that he'd like to see NATO partners boost their GDP to spending to that 5% target. And we had the German chancellor in the Oval Office today, too, who actually seemed to defend President Trump on this issue, saying that other EU and NATO partners have been urging Spain to boost its defense spending as well.
Bloomberg Washington correspondent Tyler Kendall there with the latest. Let's get some more analysis with our next guest, who served as the U.S. ambassador to Yemen and spent over 30 years in the U.S. Foreign Service, focused on the Arabian Peninsula and the Persian Gulf. Barbara Bodine is now a director and distinguished professor of practice of diplomacy at Georgetown University. Barbara, really great to have you with us, and appreciate you sharing these insights with us today. Where are we at when it comes to the strategic planning for the rest of this war? We know that the US, the last thing that they want is another forever war, but there doesn't seem to be an end point when it comes to the administration or the president's objectives here.
I honestly don't think that there has been any strategic planning for the day after, or possibly even the day of the start of this conflict. There's no real evidence that intelligence was used to its fullest extent in understanding what the situation in Iran was, or second-order ramifications. And so I really think that we are kind of making this up as we go along. The president says that we're going to escort and insure tankers. That should have been part of the planning. That should have been could have been forecast and should have been planned. So I'm not really seeing anything strategic. I'm seeing ad hoc, make it up as you go along, hope that it works out. But we're not even getting very clear signals on what the end game is. We have at least 3 or 4 different end games, and they can't all be run simultaneously, and some of them actually operate in conflict with each other. So I don't know. Sorry. I wish I had the answer. I don't.
I think we all wish someone had the answer at this point. But we had some interesting remarks, some doubt being cast by the president today, saying that, there is the chance that the new leadership could be just as hardline as the old leadership, right? We also know that Israel struck a top Iranian leadership meeting where they were meeting apparently to elect a new successor. When the president says whatever it takes, what do you believe that to mean at this point? Does it mean eventually greater U.S. involvement on the ground?
Well, no one has ever done a successful regime change from 35,000 feet. It does take planning and work on the ground, but it takes more than just boots on the ground. And I'm not entirely sure that the president is willing to pay the political price for putting boots on the ground in another war in that region. A good set of analysts would have explained to the president that removing the supreme leader and certainly removing most of the rest of the leadership is going to create a vacuum. Iran could slide into chaos. It could end up with a military dictatorship, somebody coming out of the IRGC. I think the possibility near term of a moderate leader coming to power who would be willing and able to agree to all of the president's demands, including total denuclearization, the end of the missile program, and support for proxies. I don't think that that is a realistic endgame, certainly not near term.
What are the immediate risks in this conflict as there's a power vacuum, to your point, in the Iranian leadership? How much more dangerous has this all made the situation?
I think the vacuum is extraordinarily dangerous. Politics do not love a vacuum any better than nature does. And there's going to be jockeying for position. The guys with the guns tend to win those kinds of fights. And it could be a series of interim governments, none of them with real authority, certainly not to negotiate. And I don't think we have seen the beginning of the power struggle, much less be able to forecast when it will be over. I think it's important to note that there is culturally, religiously, 40 days of mourning, which means 40 days from the death of the supreme leader. There will be an uptick in violence and probably in the whole succession issue. So this is going to take some time. This is going to take a very long time.
How committed would you say the U.S. is? I mean, we keep coming back to this question about how long this is going to last. We have been getting suggestions that the U.S. hand was forced in some ways by Israel. Does that speak to the level of commitment we can actually be expecting in the next couple of weeks and beyond this 40 days, as you suggest?
Right. That I think is a critical question, is how much persistence and focus will remain on Iran. The idea that we went to war in the region and put our allies and friends at risk because Israel was going to do something anyway, and we were going to be, the backlash was going to hit us anyway, so we got ahead of it, which is what Secretary Rubio said, is a stunning comment. This is not an administration that is known for long-term focus and persistence on details. And how long they will be able to last, how long they will stay. We also have an issue, and this gets to your question of our persistence, is we have an issue with munitions. And we will have to pull munitions away from Ukraine, from Asia, from other places. And so we've got munitions, we've got political will. We don't know what the public reaction is going to be. A lot of Trump's core supporters voted for him because they wanted an end to wars in the Middle East, not the start of a new one. We don't know what's going to happen to oil prices. So, and I think something that I think the president's been rather callous about is there are going to be casualties. And that is going to drive home to a lot of Americans that we are not just striking Iran, we are in a war. And a lot of Americans don't want that. I don't know how long we will be able to stay. I don't take the president's statements at face value for reflecting policy or considered judgment.
But we're getting updates now from the IDF saying that they're targeting Iranian launch sites and aerial defense systems in a broad wave of attacks targeting Iran beginning now. I'm curious about this multiple front situation that's opened up, right? Because a number of the targets for Iran have never been direct adversaries or indirect military confrontation. What is this strategy here? Is it and how much does it really strain, you know, the security guarantees, the diplomatic relationships in that region with the US?
Again, first of all, I don't think there's a strategy. I'm not sure that there was a thinking through of the full ramifications for our partners and our allies among the Arab Gulf states in particular. And the ferocity with which Iran has been targeting the Gulf states and Saudi Arabia, the GCC states, not just our military facilities, their economic facilities, major ports, processing plants, and also commercial, residential areas and hotels. And this really does call into question, you know, what we will be able to do to protect our friends and allies. I will say that one of the reactions has been from most of the GCC states that I've heard from is that they had been working to have a constructive relationship with Iran to try to stabilize the Gulf. They all need that waterway to be open and free, not just for oil and gas to get out, which is how we look at it, but they get 80% of their food through the straits as well. And so there's a very strong feeling that Iran has betrayed their trust and their relationships and their abilities to have a stable relationship. But how exactly this is going to play out, are they going to feel that we drag them into this position, or are they going to be looking to us to help them secure their territory, their assets, and most importantly, their people?
Barbara, it's interesting also to your point, maybe the calculus for Iran is to exert more pressure on these Gulf states so that they in turn exert pressure on the U.S. to end this conflict. It's been great to get your insights. Thank you. Barbara Bodine is former U.S. ambassador to Yemen and director and distinguished professor in the practice of diplomacy at Georgetown University. Now coming up, we speak exclusively to DFI Retail Group Chief Executive Scott Price after their swing back to full-year profit. And of course, we'll have more on the market impact of the Iran war. This is Bloomberg.
Risk assets found some semblance of relief after President Trump assured that the U.S. would escort and insure tankers and other vessels through the Strait of Hormuz, easing somewhat fears of a major global supply shock. Let's get to our Bloomberg MLAS strategist, Brendan Fagan, in New York. So, Brendan, does this change the narrative, given that we are still waiting for details on how this would potentially work?
I do think it's a major positive. I think you're looking at one big trade across the board here. The equity trade is an oil trade. So if there is anything that can ease the boil in oil, we saw a 9% gain pair pretty aggressively earlier today. So if Trump does get away with these guarantees and bring in the Navy to guide ships, I think that definitely helps the risk tape. But more broadly, that once we get through this episode, we're just going to go back to the thoughts of an AI bubble, private credit focus. So it does help, but there are still certainly clouds on the horizon.
Brendan, these clouds also include those coming from the private markets. I mean, how worried should we be when these geopolitical fronts have opened up that, you know, one sector, corner of the market could also influence what we're seeing macro?
Yeah, it's certainly an area of concern. I think the big thing here is that what's being done behind the curtain is finally coming out for all to see, and that is private credit. There is no mark to market here. So when things go wrong, they go wrong in a spectacular fashion. We saw it with First Brands and how that hit some of the financials, and now we're seeing it again in the UK with MFS. So it also doesn't help when Mark Rowan over at Apollo pours some cold water on the sector and says there will be a shakeout and a drawdown. So I think they just need to navigate this turbulent period here, and we'll see where that takes markets.
Are we expecting to see a recovery when it comes to Asian currencies and some EM assets too?
Yeah, it was a pretty tough day for EM and specifically Asian currencies. Obviously, there's a lot of dependence on imported oil and imported energy across the region. So once again, it goes back to what Trump said. If the U.S. Navy is stepping in to allow shipping to pass through the Strait of Hormuz, I think that does offer a relief bounce. We saw the Korean won fall to its weakest level since the financial crisis. So there's room to rebound, but we just need to see whether what Trump says is accurate, or there are reports out of Iran that the Strait of Hormuz is closed. So we just need to see concrete action now to see if there can be any follow through and a bounce in Asia.
With the lack of detail, though, are we really going to see any bounce today? I mean, you talk about South Korea. These are economies that are heavily dependent on oil imports. Perhaps there was also a case of bad timing, given how South Korea wasn't part of the sell-off on Monday with market shut. How much realistically are we expecting, in terms of recovery today?
I think the one thing I always look for is you always see a little bit of follow through on the Asia Open from the overall tone of the New York session. But the way we closed out the New York session here is pretty optimistic. We saw a decent bounce, like we said, across EM and Asian FX. Aussie and Kiwi bounced off the lows pretty aggressively. So I think part of that had to do with a pretty sizable options expiry in the euro. So that kind of saw some movement in the dollar around 10 a.m. Eastern. But that's when we bounced across the board in risk. So I think there's room to bounce here.
Brendan, thank you. Much appreciated. Bloomberg M Life strategist Brendan Fagan. Now, China's leadership is meeting this week as well in the shadow of these crises abroad as it puts the finishing touches on its blueprint for growth through 2030. For more, Bloomberg's chief North Asia correspondent Stephen Engel joins us from Beijing. Stephen, give us a lay of the land.
Well, obviously, this afternoon is going to be the beginning of the CPPCC, which is the advisory body, the larger advisory body to the National People's Congress, which begins in earnest tomorrow. It'll last about a week. And you're absolutely right, Avril. Right now, there is more importance, perhaps, on finding exactly how the Chinese leadership is thinking. Keep in mind, the National People's Congress is a highly choreographed affair. And this year, they're going to be rolling out their 15th five-year plan that will run, basically dictate economic policy until 2030. That's blueprint has already been pretty much settled on. And we had comments from Xi Jinping at the end of the year and after the Central Economic Work Conference at the end of last year, essentially saying that they're going to significantly boost domestic consumption as a part of the overall economy. That's the longer term goal. Immediate term tomorrow from the premier, we're going to get the growth target, which is likely to be lower than years past because, again, there's not a lot of urgency to ramp up the debt levels and to stimulate the economy right now as they are looking to find short-term and long-term stability and resilience.
Bloomberg's chief North Asia correspondent Stephen Engel there in Beijing for us as we look ahead to more news out of the leadership and the meetings there. More ahead on the Asia trade. This is Bloomberg.
More on the conflict in the Middle East. Airlines around the globe are suspending more flights to additional destinations across the Middle East amid heightened tensions. Flight tracking service Flight Radar 24 says more than 12,000 flights have been cancelled since Iran's first retaliatory strike over the weekend. The UAE, for its part, is starting to establish what it calls safe air corridors that will allow for as many as 48 flights an hour. Haidi?
Well, the Canadian Prime Minister Mark Carney says he supports the US military action in Iran with regrets. More on his comments as he visits Australia next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Labour market anxiety sky high.
Could a weak labour market report spook economists?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
There actually are white-collar jobs right now. It's not just doom and gloom.
The narrowness of job gains has always been the question.
The stability is masking some fragility.
Let's pay attention.
The February Jobs Report, Friday on Bloomberg.
Take a look at what we're watching when it comes to FX. We could see the prospect of a bit of respite for Asian currencies. This even as we continue to see the dollar reclaiming its role as an ultimate safe haven with this ongoing Middle East war. We've seen the biggest two-day rally when it comes to the US dollar in nearly a year, with that spot index really just surging. That demand really being seen as a counterpoint to any of the doubts that we've seen crop up about the greenback over the past few months. Almost nearly all 16 major currencies tracked by Bloomberg falling. Here in Asia, though, we're watching the likes of the Chinese yuan. We had a stronger fixing from the PBOC. That saw the yuan rallying the most in 10 months ahead of the National People's Congress. We're also watching the euro later on in the trade as well, falling below that 200-day moving average. Well, Canadian Prime Minister Mark Carney has arrived here in Australia for meetings with his counterpart, Anthony Albanese, as well as the country's business leaders. Bloomberg's Paul Allen joins us with more. And, of course, geopolitics is overshadowing much of this agenda. But what's the plan here?
Yeah, he made some remarks this morning in a media conference. He's talking about opportunities for Canada and Australia to talk about critical minerals, defence, intelligence sharing as well. Talked about Australia being a natural partner for Canada and friends that go back generations based on trust. So on Thursday there'll be meetings with Anthony Albanese, the cabinet business leaders as well. The Resources Minister Madeleine King's already been talking about opportunities in the critical minerals space, but obviously a lot of the press pack travelling with Mark Carney is Canadian. They had a lot of questions about India, and in particular India's alleged involvement in the killing of a Sikh activist in Canada back in 2023. And of course Mark Carney's last stop was India, where he did manage to work out a thaw in relations with Narendra Modi, perhaps not a reset though.
When it comes to Iran, though, some of his remarks were quite interesting, which really kind of proves two things can be true.
Absolutely, and the press conference kept circling back to Iran again, perhaps unsurprisingly. And we got, again, Mark Carney with, pragmatic rhetoric, talking about, look, we take the world as it is, not how we want it to be. He once again echoing his thoughts in Davos about how the international-based rules order is dead. He described Iran as a principal source of instability in the Middle East and said, look, nobody has a civilian nuclear program buried a mile underneath the desert. So sort of couching this in terms of, well, it needed to happen because the rules-based order had failed, but at the same time lamenting the failure of that order and saying that the US and Israel acted without UN approval, acted without consulting its allies, including Canada. So he's calling for a de-escalation while condemning Iran's attacks on civilian infrastructure. He says a diplomatic solution is needed here, but based on current evidence, that's not going to happen.
Paul, thank you. Paul Allen in Sydney for us. Now, with war with Iran abroad, back home, the biggest contest so far of the U.S. 2026 midterm election cycle is underway, with voters in Texas making their choices in a statewide primary. The vote could determine whether Democrats have a shot at narrowing the gap with Republicans in the Senate come November. Let's bring in Bloomberg's Texas Bureau Chief Julie Fine. So, Julie, all eyes on these twin primaries. How are either sides navigating this? How much is Iran even figuring into the equation at the votes?
Well, the thing is, there's 10 days of early voting in the state of Texas, 11 days actually. So a lot of people have already cast their ballot before everything happened with Iran. In the past few days, the candidates have been making those last-minute campaign stops. It has come up just a little bit on the campaign trail. We really won't know until later this evening how much and if at all this played into the votes.
At the same time, though, we know the domestic pressures were already pretty intense when it comes to the GOP, cost of living pressures, not to mention some of the recent unhappiness over the way that immigration has been tackled. How does opening up a new war against campaign promises, against promises being made in the State of the Union just a few days ago, how does that factor into the public psyche and the voter psyche?
Well, it definitely will factor in whether you are pro the president's actions or against them. It's certainly been part of the commercials that we have seen for these candidates over the past few months. Again, this is becoming a very bitter primary on the Republican side. You have three candidates in here, an incumbent who's been here for several terms, the acting attorney general, and a congressperson. All of them wanted President Trump's endorsement. He did not endorse any of them. On the Democratic side, you have Congresswoman Jasmine Crockett, who has been in Congress several terms. And then you have her against a newcomer, State Representative James Tallarico, who in the past few days appears to have picked up steam. It's a little difficult to read the polls right now, but we are waiting to see what happens when the polls close in about an hour and a half here in Texas.
Julie, talk to us also about the challenges that the Democrats face, because this is a situation where they haven't won a statewide race in Texas, right, since 1994.
The Democrats in Texas have not won for several decades, as you've just said. They each year feel that they are getting closer, that it's closer to their year. However, it is a major, major hill to climb for any candidate in Texas that's a Democrat to take on a Republican. Again, in this race, you have three well-known Republican, one incumbent who's been sitting in office for some time. So that just adds to the challenges. However, one of the candidates in this race, Attorney General Ken Paxton, has been indicted. There have been some problems regarding his personal life that have become public. So Democrats feel if he's the candidate, this could be their best chance in some time.
Our Bloomberg Texas Bureau Chief there, Julie Fine, with the latest. Coming up on the Asia Trade, our exclusive with the Chief Executive of Asian retailer DFI Group after their swing back to full-year profit. Scott Price joins us next. This is Bloomberg.
Focus also on earnings. We have the Hong Kong-based retailer DFI Group reporting full-year net income that beat estimates. The Singapore and London-listed company operates Maxim's, Manning's, 7-Eleven, Welcome and IKEA stores in parts of Southeast Asia and Greater China. Let's get more on the results and the outlook for the consumer sector. Joining us exclusively is Group Chief Executive Scott Price. Scott, it's great to see you, and congrats on the beat in net income for the full year. How would you rate the progress in terms of bringing in those double-digit returns, which was a goal that was outlined late last year?
You know, customers in Asia have been through a lot over the last couple of years. In the post-COVID economy, inflation, interest rates, we saw this huge pivot to value, which we adapted to, and we actually have sort of changed quite a bit of our sourcing. But what's been interesting is over the last, say, second half of last year, we saw a good increase in revenue versus the first half. And it's because customers are starting to invest in fun and wellness in particular. And so we saw that combined with all of our efforts to reduce costs and manage our overall cost structure, we're able to deliver a 35% increase in our bottom line profits.
We also know how parent Jardine has been identifying assets that perhaps don't generate as much returns. Is DFI looking to do the same? If so, how are you going about identifying them?
Yeah, so we have a total shareholder return model that we have relentlessly focused on over the last couple of years. As a result, we have divested some minority share positions across a couple of businesses focused on becoming a core retailer. As a result, last year, we were able to return over $740 million to shareholders. Part of that was a $600 million special dividend. And as you can see, a doubling of our stock price over the last 12 to 18 months. So I think just this core focus on delivering with a high level of return on capital employed, good returns, has been attractive to the markets.
This week's National People's Congress in Beijing will be focusing again on boosting domestic consumption and demand. You guys have run into problems when it comes to the mainland Chinese market. What's the strategy going forward now?
So we had a real, I think, understanding that a store-based model for health and beauty was not the right approach for us. So as a result, we focused upon e-commerce. But we've got over 1,000 convenience stores in China, and we're seeing a pretty significant pivot again towards this convenience and the meal solutions that we provide. Overall, last year, we're up to 115,000 orders online a day. A good number of those are in our China business in terms of quick and convenient meal solutions. So we are seeing a recovery. I still think that the China customer is cautious. But in general, we've felt pretty good about our proposition, our performance in China in the last 12 months.
Where are you adding investment, if anywhere? Where are you thinking more of divesting, including your thoughts at the moment when it comes to potential spinning off of Mannings?
So we've got a pretty robust portfolio geographically. So in mature economies like a Hong Kong or a Singapore, for example, we're investing in omni-channel, so very much around the digital proposition. That includes loyalty programs, retail media, data monetization, et cetera. In Southeast Asia, we're looking again to open continued stores. So in particular, our health and beauty is called Guardian in Southeast Asia. Vietnam, Indonesia, those are markets where we still think we're underpenetrated and therefore an opportunity to continue to open stores. And of course, in China, we have 1,000 convenience stores. We see that could be a significantly higher number in the coming years.
So for the moment, are you perhaps not looking at a potential spin-off of Mannings?
No. There's a value in terms of data, customer loyalty, and importantly, cost. There's a synergy across our portfolio of operating companies. Our sales, SG&A is lower as a result in health and beauty because of the shared cost structure of the other business units, including, again, home furnishing, as well convenience stores and food. So, no, we're not looking to spin that off.
Okay. You talk about some of the expansion, and it's interesting to me sitting in Southeast Asia, some of the markets that you've highlighted. You think about places such as Indonesia, where perhaps the middle class isn't growing as fast as some might like. How are you looking to navigate markets such as these?
We're a retailer of daily essentials. No matter what happens, people are going to eat, they're going to shower, they're still going to want to feel good about their health. We're in the right categories. What we do is we pivot towards value products. And as a result, through changing of our sourcing over the last 12 months, I think we've stayed relevant. We have had double-digit growth in Indonesia over the last year. Which to me just reflects, one, I think customers are still in Indonesia willing to spend their money, but I think they're being a little bit careful about what are the products and the categories in which they buy. I think our Guardian business has done well as a result.
In Hong Kong, though, a lot of consumers are choosing to spend their money elsewhere, geographically, right? How's that impacting your outlook? It has been a difficult market. There's been staff cuts. Do you envision more cuts to come?
So, Heidi, I think first we are leveraging technology as a result. We have the ability to reduce cost, and we've not had major staff layoffs. I think that it's much more targeted just in terms of continuing to leverage technology like everyone else. The geographical focus, there was a lot of movement, both in terms of Hong Kong and Singapore, of consumers seeing an opportunity to get a cheaper basket across the border. For us, that was in Shenzhen and Hong Kong, Johor Bahru when it talk about Singapore. We have worked really hard to change our sourcing. So what used to be a 17, 18% premium on 200 items in Shenzhen, you buy them in Hong Kong, you pay 17, 18%. We're now at a 1% difference during Chinese New Year, the first 2 months of this year. So we have taken away the economic motivation. As a result, we had roughly a 2% volume increase in 2025. So we think we're on the right path.
What about rental spend? Can you give us some numbers on how much that's come down for Hong Kong and for mainland China as well? How much the spend side is playing into the equation?
So in China, we do a lot of shop fronts, not necessarily malls. So rents are a one-off. I don't know that there would be, given the 3-year contracts, a specific number I'd call out. In China, I think in general, we're pretty happy with rent as a percent of revenue in the convenience stores. In Hong Kong, absolutely. There has been, I think, an opportunity for landlords to continue to get maybe a little sharper with their pencil We've seen some of the rent reductions as we renew particular stores, which has helped us reduce costs in terms of the prices to customers. So when I talked about bringing that 18% premium down to 1%, a number of cost buckets had to be taken on, including rent.
Hey, Scott, when it comes to cost to consumers, what's been dominating headlines the past couple of days is the Iran conflict, the potential for high energy prices, pushing up the cost of living potentially at the time where economies and governments have just been able to kind of get it under control. Is that a risk that you see? How do you see this playing out, if at all, on the business?
Do you know, roughly 70% of our sourcing is coming from intra-Asia. So there's going to be less of a risk in terms of disruption of access to product. In terms of cost, look, you know, we're ready to pivot no matter what the world throws at us. We're relentlessly focused on, you know, being an everyday low-cost operator so that we can provide in the world in which we all live the lowest possible products onto our customers. Oil or energy as a percent of retail net pricing is not so material that we would see immediate impacts. I think there are other things that we can do to protect retail pricing and not pass that along necessarily. I think, you know, mass retail is a bit unique in that way compared to maybe some other industries that a surge of 20% in oil would be a pretty significant challenge for them.
Scott Price, really great to have you with us, who's Chief Executive at DFI Retail Group. You can also explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. You can check that out at bloomberg.com/videos. More to come here on the Asia Trade. This is Bloomberg.
We are counting down to the markets open in Korea after stocks there suffered a really, really bad day. The worst sell-off since 2024 amid the risks from Iran. The country, of course, is a net importer of energy. And if you put it in dollar terms, it is an even worse state of play. It wasn't just about stocks. We also saw the Korean won getting hit really hard at the lowest level now against the greenback since the year 2009. And the sell-off was on the currency by the most since that time as well. Just to put things in perspective, this is an even worse decline sell-off in terms of the currency than when the martial law was actually announced. And, you know, just to give you a scale of what we saw in South Korea just a day ago. When it comes to stocks, let's bring in Bloomberg's Asia equities reporter, Sang-Mi Cha. Sang-Mi, this crash in South Korean stocks, maybe a sobering warning for the rest of the world. With the way U.S. stocks traded overnight, are we likely to see signs of further spillover declines, or can we see a bit of a reprieve today?
That's correct. Yesterday, we have seen a massive decline in Korean stock benchmark Kospi. We always look at the memory chip makers in the U.S. overnight. So Micron and SanDisk have both lost about 8% overnight. So that will translate into the Samsung and SK Hynix performance as well. In fact, we're seeing the pre-market moves already, and they're already extending the losses that they have had yesterday. And together, the two stocks has lost about $170 billion in combined market cap. So that is quite significant here when considering that Samsung was heading into the $1 trillion market cap here. So all of this connects back to that inflation risk here, because a lot of these chip makers rely on cheap borrowing to actually sustain their growth. And so this is all tying back to that. Of course, I talked to some analysts. They say that the actual closure of the Strait of Hormuz does not impact the value chain, the supply chain logistics here, because a lot of the logistics are done through air cargo. But again, it is what's significant is, again, that risk of slowing, that Fed easing path is one of the biggest factors that will hurt the Korean chip makers.
Foreign investors are losing confidence, right, as well, dumping billions in Korean stocks. Retail investors, though, stepping in to scoop up some bargains. What does that divergence tell us about the outlook then?
Right, we have seen that bifurcation for the past few weeks, actually. So yesterday alone, foreign investors offloaded about $3.7 billion in Kospi shares. But interestingly, the retail investors actually did the polar opposite, where they snapped up around the same amount of Kospi stock. So that offset a little bit of that decline. And we have been seeing this moves the past few days again. This is because the mom and pops here actually still are holding on to this capex rise and this EPS growth for these Samsung and SK, the chip makers here, and also some of the other industries and companies. And primarily we're seeing the rotation into the defense shares because of what's happening in the Middle East.
Bloomberg's Asia Equities reporter Sang-Mi Cha there. Let's get you the latest when it comes to corporate headlines. And US-listed shares of Singapore-based e-commerce provider Sea fell the most in more than 2 years after quarterly earnings missed estimates. Net income of $411 million was up 73% from a year earlier, but still short of the average $442 million prediction. The company is trying to ward off tough competition in Southeast Asia from the likes of Temu, TikTok and Alibaba's Lazada. Bloomberg has learned that the billionaire co-founder of Xiaomi, Lin Bin, has reached agreement to buy a 1% stake in the Miami Dolphins NFL franchise. Lin's stake in the holding company that owns the Dolphins would also include assets such as the Formula One Miami Grand Prix and the Hard Rock Stadium. The deal will have to pass through the NFL's approval process, where at least 24 owners must agree, Avril.
Haidi, aside from some of these purchases, potentially, we're also watching out for how markets might open. Look at how Kospi futures are pointing to potentially another day of steep declines on Korea stocks. We are already seeing that in Australia. Nikkei futures also, we could see a mirroring of Tuesday's market action in spite of Trump's assurances when it comes to insurance and perhaps some help with navigating the Strait of Hormuz. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And Avril, despite, of course, some relief across energy and oil markets with the promise from President Trump of potential military escorts and insurance to guide deliveries through those key parts of the Middle East required for those crude deliveries, we are also seeing not a whole lot of conviction across other asset classes.
Yeah, those promises of relief perhaps lacking in details. We get more analysis on that. But to your point, perhaps of the lacking in conviction, you're looking at perhaps another down day when it comes to stocks in the region as well, Haidi.
Yeah, let's get straight to the open in Tokyo, where we are expecting across in Tokyo as well as Korea some losses to start that session. Let's start off with Japan, particularly as we continue to watch that weakness in the yen. It's interesting the dollar has continued to really outperform when it comes to the haven currency of choice, despite, of course, the geopolitical instability, you could argue, being derived from the attack across the Middle East. And we are seeing more waves of these attacks happening even as we speak. We had that confirmation from Israel and the IDF saying that a new wave of attacks has begun across Iran. We're seeing the Nikkei 225 coming online solidly lower there. We're seeing downside of just about 1.5%. We'll be watching for sort of how a lot of these defense-related names, tech-related names perform throughout the course of the day. But there's a lot of concern there, particularly across the energy trading names as well. This comes on the back of a 3% decline in that market. The oil prices hitting automakers in particular as well. Let's take a look at the Korean markets, because this was really where we started to see the potential for a whiff of panic selling, right? Particularly as we see foreign investors continuing to dump Korean assets. Retail investors, though, starting to step back in. And we are taking a look at some of the major heavyweights when it comes to this market, the likes of Samsung and SK Hynes. They're trading as well. That fading AI trade is certainly of concern for some of these big names, Avril.
Yeah, we're seeing the Kospi continuing its losing ways. Yields are climbing as well. Talk about losing from 405 overnight. You're seeing on the 10-year around 406. Futures on stocks pointing to further declines. We did see how the energy price gains paired a little following Trump's comments on assurances for helping to navigate the strait. But he also weighed in on energy prices. Take a listen.
If we have a little high oil prices for a little while, but as soon as this ends, those prices are going to drop, I believe, lower than even before.
For more, let's bring in Bloomberg Senior Economics Analyst Adam Farah. Adam, great to have you on a day like this. We are looking at Trump's assurances and trying to unpack how much can actually be delivered. What are we hearing in the way of details? Does this provide assurances to ships and tanks to navigate the strait?
So sadly, as we've had with many of these announcements, we're left with just his Truth Social post for details. And while it did include some information on how the administration actually plans to implement this new method of providing insurance for ships that have been withdrawn due to the ongoing fight to enable them to pass through the strait and onward to their destinations, there are still serious bureaucratic and other questions about how feasible this is in the U.S. government. The other outstanding issue is simply understanding where the Iranian military capabilities stand at this point. We're not getting enough updates right now to have an ability to assess whether Iran no longer has the ability to implement its long practiced plans to close the strait militarily with its wide array of anti-ship cruise missiles, small boat tactics, and sea mines that could, even if a U.S. naval vessel was escorting them, could cause massive problems and damage to both commercial and naval fleets. So we're still left with lots of questions as we try and move forward here.
At the top of that list, particularly, is really what the prospect for regime change or leadership change could look like, right? We know that one of the targets struck was his top clerical meeting that had gathered to elect the new leader. What do we know about what the objectives of the US are and what will be required, boots on the ground or otherwise, to actually get there?
So we still don't have concrete information from the administration on how they view long-term objectives in a tangible way. The president has shifted significantly since his initial comments on Saturday to points yesterday where he highlighted the need to destroy the ballistic missile capabilities of Iran and its ability to ever have a nuclear weapon, but also end its support for proxy networks and terrorist efforts around the region, but without much detail as to what they see as outcomes that they would deem successful. And the president has said that this could take anywhere from 2 weeks to 5 weeks or more, leaving still just large questions for the market and all of us as we're trying to understand both how the administration will judge success and what Iran will look like afterwards. Clearly, there is a growing understanding that the president may be satisfied with an Iran that, while it looks different, still maintains some level of the current regime, as long as that regime is deemed to be somewhat pliable to the administration and amenable to U.S. interests, somewhat like the situation in Venezuela.
Adam, we're also trying to figure out whether there is a Trump put to this Iran crisis day by day. How much is this energy crisis, the shipping disruption, adding to costs to the U.S. economy?
So far, we had what seemed to be almost a hangover on Monday without much market reaction to this situation, with seemed to be an assumption that this would end faster than the president intended. But markets certainly sought to catch up a bit today, although it paired losses. I think the deep concern here that is clearly driving the president's efforts to come out on energy is long-term energy prices and the effect of losing the flow of oil out of the Strait of Hormuz, which could, impact over 20% of global oil consumption on a yearly basis. So I think right now we still haven't really seen what the impact is going to be, and will depend heavily on how the administration proceeds and whether some of this oil starts to flow.
Adam, as we chat, we're seeing huge moves, particularly when it comes to the Korean markets, Japan markets, and it's very interesting, almost everything to the downside other than defense, which we have seen obviously as a very obvious positive play there for these markets. I do wonder, Adam, if we take a look at, I guess, the intel that we have on munitions, on weaponry, on military capability, what are the implications for the Asia Pacific if that is being removed and distracted in an area that we see huge efforts at influence and dominance by China?
There are serious concerns that a prolonged military campaign in the Middle East not only draws resources, as we've seen clearly from the deployment of a massive number of naval and air assets to the region, but also these munitions, as you just highlighted, particularly on the higher end. That's offensively things like the Tomahawk cruise missile and other long-range cruise missiles and new ballistic missiles, along with, though, the interceptors that have been so integral to defending U.S. partners and U.S. bases in the region from Iran's ballistic missiles. And there are real questions about how long those stocks can maintain as this conflict continues. You know, there's reporting that Qatar could run out in just a couple of days. And then the question is, where do they come from? And what other resources are they going to pull from? And that's where the Indo-Pacific comes in. If they start pulling stocks from the Indo-Pacific, it raises real questions about the U.S. ability to conduct a high-end fight if the China situation, whether over Taiwan or any other issue in the South China Sea, were to escalate. And as production rates are certainly rising on some of these systems, they still far lag behind the usage that we're seeing, raising serious timeline issues for the delivery of further replacement missiles, both for the U.S. and partners and allies throughout the world.
Adam, great to get your perspective on the program today. Bloomberg Economics Senior Joe Economics Analyst Adam Farah. Now let's recap what we're seeing in markets since the open. The Kospi has extended those declines, or paired some of those declines that we saw of about 5% earlier. The Korean won, interestingly, is also rebounding slightly. Some speculation that intervention is at work here. Asia Pacific index is down about 1.5%. We also have South Korea briefly halting program trading in the Kospi market. A lot to unpack. Joining us now is Kerry Craig, global market strategist at JPMorgan Asset Management. Kerry, what stood out to us was the decline that we saw in a market, South Korea, that had been leading the pack higher for much of this year. I mean, how are you viewing the ructions we're seeing in South Korea at the moment?
Good morning. Well, I think what we're seeing across the Asian morning open here is obviously a continuation of a bit of the sell-off we saw yesterday in the US. There's still the concerns around the escalation of the conflict in the Middle East and how long it could last, and then the knock-on effects from the potential closure of that Strait of Hormuz for a longer period of time, which would flow through to restricting the energy that was available to markets like Korea and Japan, who are big energy importers. So I think that's probably on the macro front. And then on the market front, obviously markets there have done very well. So you're probably seeing a continued repositioning by investors, taking a little bit of what's done very well in their portfolios, looking to rotate that into more defensive positioning as they sort of weigh what the scenarios that may play out in the Middle East and the duration of which is the big question at the moment. So I think it's probably a little bit more of the rotation within portfolios that's driving this, rather than thinking about a big flight away from risk assets at the moment, given the questions we still have around the severity and duration of what the conflict in the Middle East may look like.
Do you think then there is more selling to go when it comes to Korean assets?
I think the market there has done very well, and it's been underpinned by a very strong secular theme around both the AI stocks, as well as thinking about some of the defensive positioning that comes through in terms of the build out in Europe, given their focus on wanting to increase some of their defensive capabilities after the Ukrainian-Russia conflict. So there's big structural supports there for the market. Obviously, valuations had moved up a long way, and I think when we look at the North Asian markets, whether it's Taiwan or Japan or Korea, they're going to be going back to thinking about their role in that AI supply chain and how that really hasn't changed given what we've seen in the last couple of days. And so that can provide a little bit of a cushion, or should the outlook start to improve, you may see investors that want to move back into those markets at slightly better valuations. That's still a bit early on that question, but I think that there's a longer term case for these markets given their key role in that AI secular theme.
That's kind of what I wanted to get to, because I think even just a month ago, we were talking about the rotation into Europe, into Japan, into emerging markets. All of these markets have been really pummeled, particularly over the past few sessions. We've talked about the sell-off when it comes to the AI scare trade. You are starting to see the emergence of value in some of these markets and companies?
Yeah, there had been a shift in terms of overweights towards that growth theme that had come through, a movement back in towards value that had been going through in Europe for like better part of 12 months and has started to appear in the US since late last year. I think the question of whether these prices could fall a bit further and that derating could go further in markets like US and Korea is a little bit too early to tell. I mean, the timing around these things is the biggest issue. I think in the long run, though, you'll still see a lot of investor interest in those markets, given that they are the big producers of memory chips. Then the demand is always going to be there as we see that build out in AI capabilities in the US and around the world. So there will be a point where these markets look a little bit more attractive and you'll find the stabilization. Trying to time that is something that we wouldn't want to get into at the moment, given the uncertainty and the size of the tail risks that are out there at the moment. But I certainly think that there's going to be opportunities that come to the fore in the years ahead. I think right now investors really need to focus on the appropriate levels of diversification and hedges in a portfolio where we do have what could be quite sizable risks around growth. At the moment, the focus is inflation and depending on how things develop in the Middle East.
It's interesting. We've had a pretty stellar earnings season here in Australia. Australia's always an interesting one when it comes to, a diversification or a place of safety when there's global uncertainty going on. Are there opportunities in the Aussie market?
Well, certainly it looked like on Monday that the market here hadn't been as affected, and I think you're seeing a bit more of a sell-off come through this morning and yesterday. The currency also taking a bit of a hit, given it as a beta currency and cyclical to the rest of the world. I think those same continuations around some of the repositioning in portfolios and balance will come through. I think a healthy rotation we had seen in the Australian market last year was towards thinking around more of the resources side and a little bit less on the financial side. Again, if it's a case of thinking about a bit of an inflation shock that may come through rather than a deep-seated growth shock, you should see those continued rotation towards the resource and materials names do a little bit better in that environment. And again, I think as investors look for ways to provide a bit more diversification and resilience in portfolios, income is obviously a key part of that, and the Australian market as a relatively high income generator can offer a little bit of a buffer in that regard.
Kerry, always great to chat. Kerry Craig, Global Market Strategist at JPMorgan Asset Management. More ahead on the Asia trade. This is Bloomberg.
Now, apart from the crisis in Iran, China's leadership is also meeting this week in the shadow of these issues abroad as it puts the finishing touches on its blueprint for growth through 2030. Policymakers are under pressure to boost domestic demand and reinforce confidence. Bloomberg's chief North Asia correspondent Stephen Engel reports from Beijing.
Uncertainty once again dogs the outlook for Chinese leaders as they head into the annual session of parliament. Sure, by many metrics, China weathered the tariff barrage from the United States, achieving its annual growth target last year and finding leverage with rare earths and its own domestic AI development. But the Iran situation has thrown the geopolitical outlook into disarray, as the U.S. has for a second time, after Venezuela, taken out the leadership of a Chinese ally.
This is going to have a huge impact. It's opened the Pandora's box for whatever we're going to see in the future, because all the countries are fear of this unilateral approach.
Chinese Foreign Minister Wang Yi calls the attack on Iran unacceptable, and it's no doubt alarming to the Chinese military as well, which awaits word of its annual defense budget Thursday here at the National People's Congress amid an unprecedented purge of top generals. Now, it's a distraction as well when the task at hand here is really rebalancing and shoring up the domestic economy and further tariff-proofing it by boosting domestic demand ahead of Trump's highly anticipated, or at least planned, trip to Beijing at the end of March. American Manny Menendez has been doing business in China since U.S. diplomatic ties with the PRC were established in 1979.
President Trump is very transactional, so I think he will come looking for deals. I think there could be a large Boeing order. I think there'll be increased in purchase of ag products, for example. China wants predictability and stability, but both countries want a stable economy. I'm expecting some really big things.
We remain constructive on China because of like AI adoption and also as across different sectors, not just agentic AI, but into like physical AI as well, like robotics and then also like semiconductors as well. So we'll need to continue to see the policy support from the MPC, whether they will be leaning towards rebalancing and whether they'll be prompting for like higher quality growth and a focus on tech.
It has to stimulate the economy. The economy is clearly slowed. We've yet to see, the first robin of spring emerge from any of the stimulus that's been announced so far. I think it'll really be closer to May, June before we get a clear pickup in growth, but it will be there.
The Premier's growth target Thursday will give a good indication whether or not Beijing shares that optimism.
And Steve joins us now live from Beijing as we are watching very keenly in terms of what policy announcement, what economic announcement potentially. But a lot of this sort of takeaway from the political pageantry tends to be signalling as well, right? What are you expecting and hoping to hear about?
Well, this is an interesting year because it's also where they're going to essentially ratify or codify the next 5-year plan that will run through 2030. And sure, that blueprint is pretty much already set in stone. They formalized it at the Central Economic Work Conference and various gatherings at the end of last year. It goes to the National People's Congress to formalize it. But again, the fact that there's all this uncertainty in the Middle East and, of course, coming after a year of trade battles with the United States, it makes this next 5-year plan perhaps even more important. And Xi Jinping has already telegraphed that is going to be focusing on significantly boosting domestic demand. China has long talked about rebalancing its economy, but it has always sort of stuck to the tried and true cocktail of relying on exports, relying on manufacturing. And now has come the time, with more protectionist barriers going up overseas, to boost that domestic demand, create a bit more equilibrium in the economy. Maybe we'll get a target for over the next 5 years of the percentage of domestic consumption as a contributor to GDP. Now it's about 40%. If they set a target at 45 or even as high as 50, that would be significant. I'm not saying I expect that, but many economists have said that would be a good thing to do because then they will hit that target. Speaking of targets, the shorter term targets every year at the National People's Congress is about the growth target. Last year it was around 5%. That's exactly where they hit, despite the trade war. This year we are expecting, most economists are saying it could be set as anywhere between 4.5 to 5. There could be a range instead of a hard number or a vague number of around 5%. Manny Menendez, who was in that package I just aired, he thinks it's going to be set at about 4.8%. You're seeing the other growth forecasts, Goldman Sachs saying about 4.8%. So that's important because that will put less pressure on the provinces to deliver and less pressure on policymakers to stimulate. Xi Jinping does not want to overstimulate, create debt bubbles and the like. I think they're going to be basically accepting lower growth right now as they try to rebalance this economy.
Bloomberg's Chief North Asia correspondent Stephen Engel there with the latest out of Beijing. We'll be back with Steve throughout the course of the day and this week. But take a look at how we're tracking when it comes to these markets. A huge sell-off that continues when it comes to Japanese markets, as well as the Kospi off by just about 2.7%. Really the only winners at this point, as we have seen thematically since the start of this conflict in the Middle East, have been some of those defense names have been a highlight. But really, in particular, even as we speak, we're seeing those losses in Korea being extended past 3% now in really some significant volumes. We've seen a lot of these foreign investors dumping those Korean assets. There has been some bargain hunting from the retail side as well. As a whole, Asian stocks are off by just about 1%, despite, of course, these assurances from President Trump that when it comes to oil tankers, we could get military escorts, we could get insurance to ensure minimize disruption to global crude markets. But clearly that has not played out as a positive throughout the rest of this market. Crude, though, New York crude up by just about 0.5%. S&P futures looking also a little bit positive at this point. We have also been hearing from David Solomon of Goldman Sachs, who is here in Australia at the moment, here in Sydney, saying that the US economy, for that part, remains in pretty good shape when it comes to the war in Iran. Across the Middle East, it will take weeks for the market to digest these war implications. There's so much that's unknown at this point. The market reaction has been more benign, he's saying. We will, of course, dive deeper into those topics. Our conversation with Goldman Sachs CEO David Solomon tomorrow from the bank's Alternatives and Macro Summit. He'll be sitting down with me throughout the course of that conversation. More ahead here in the Asia Trade. This is Bloomberg.
You can't make a decision about whether to get British armed forces involved in a conflict because it may or may not make it more likely to get a trade deal.
The UK Chancellor of the Exchequer, Rachel Reeves, there speaking. Let's look at how European futures are opening up after what has been a pretty difficult few sessions there. We saw European stocks really tumbling, breaching that 200-day moving average. Inflation, the rate outlook really darkening there. We're seeing futures perhaps seeing a little bit of respite given those comments from President Trump about insurance and military escorts for oil transport throughout the Middle East as we continue to see the escalation when it comes to this war. We did see European stocks, though, posting their biggest two-day drop since April with the intensification of this conflict, but perhaps a little bit of a bounce back today. We're also watching Spanish stocks as well. President Trump saying that he'd cut off trade with Spain after denial of access to military bases for the Iran campaign. Let's take a listen when it comes to Santander's Anna Boton about this relationship.
Spain and the United States have had amazing relationship forever, centuries, and I'm sure that's going to happen again very soon. So Santander, on the other side, we are a big investor in the United States. We see ourselves as a bridge between the United States and Latin America and Europe and the United States. So we all focus on serving our customers. We have close to 5 million Americans that we serve every day. So, this is a great country and we're investing more.
Here are some of the movers that we're tracking in South Korea. Interesting to see the chip makers bouncing a little. Of course, these have the ones that have been leading the market higher for this year amid the AI boom. We'll continue tracking markets in the country. This is Bloomberg.
We've got Aussie GDP numbers just crossing the Bloomberg for the fourth quarter. We are seeing bang on expectations when it comes to 0.8% for that quarter-on-quarter reading that was expected. Also doing better than the 0.4% we saw in the previous quarter. We're seeing that acceleration of 2.6% year-on-year. That was better than expectations of 2.3%. So continuing to see growth at that moderate pace when it comes to the last quarter of 2025. We have seen just a touch quicker than that previous expansion. We've seen household spending suggesting that demand rose in that quarter, albeit at a slightly softer pace than the February projections from the RBA. We've also seen, when it comes to that headline number, that household spending, residential construction, seeing some softening after the recent rate hikes. And we have also kind of been modelling expectations of course, further tightening being required by the RBA. The latest signalling has been Michelle Bullock saying that the rate-setting board's patient approach to inflation has its limits, that March meeting remains live. They'll be actively looking at whether it needs to move more quickly. So as soon as 2 weeks' time, we could get a bit of a surprise there. But let's take a look at the other things, of course, weighing into inflation expectations or reflation woes. Oil prices as this conflict in the Middle East continues to develop. We're seeing New York crude up by 0.3%. Gold also seeing some upside despite, of course, that dollar strength that continues to play out, and copper also trading positively at the moment. Interestingly, that we've seen that bounce back in energy prices now already, despite President Trump seeking to provide assurances about escorts for vessels travelling through key parts of the Middle East, as well as insurance, given all of these concerns about supply. Let's bring Daniel Hynes for more on that, senior commodity strategist at ANZ. So as is kind of typical with the president, that reassurance didn't come with a great deal of detail other than, his Truth Social post. Are you reassured? Do you think that this changes the narrative for oil markets?
What it did to me was really reiterate, I suppose, the concern that the US has around energy prices and the impact it has, domestically, politically for the Trump administration. And clearly they understand the risks that this, these attacks on Iran mean for the energy complex as a whole. So it didn't provide I think, assurance that, we'll see vessels return to the Strait. I think it's hard to imagine how the US could essentially insure the entire global oil fleet, considering the risks involved and the potential losses that could occur. And even the fact that, you would have US military or Navy, in that region border, sort of escorting those vessels through, I think would be a bit of a target on the back of those oil tankers themselves. So that could elicit more attacks by Iran on those vessels if it came to that. So I think the markets obviously reacted initially on those hopes, but clearly it's something which is going to be extremely difficult to put into place.
And particularly this time of year is when you start being reminded of how key that domestic gas price story is, right? Just ahead of summer driving season. Are there sort of elements that could alleviate that? We know that OPEC Plus has some buffer there. What about US shale?
Yeah, look, I mean, there's a variety of sort of responses we expect to see. The first will actually be around inventory releases, and we did sort of hear from the IEA that they're looking to convene a meeting and potentially release some strategic reserves there. The US obviously has its strategic petroleum reserve as well. But, those stockpiles have been whittled down a fair bit, particularly after the Russia-Ukraine war, where the US in particular utilised that to dampen prices. So the ability of those to react is rather more muted this time around. US shale industry, I think would need to see prices sort of elevated for several months before I think we get a reaction from those producers. I mean, they're not there to rebalance the market, they're there to make money. And, if they feel like these prices are going to remain elevated, then I think, we'll start to see them really pick up activity. Outside of that, there's not a huge amount of other producers that really can step in and fill the breach, considering the extent of the potential disruptions we're facing at the moment.
The way oil markets have reacted, though, they do seem a bit tame. What is your sense of, does it tell us more about positioning coming into this weekend, or the extent in which traders actually see this dragging on for? And have we seen the peak in Brent US prices?
Yeah, I do think the market's undervaluating the risks that we're facing at the moment. I mean, positioning-wise, we came into actually this these attacks on the weekend relatively bullishly. So I don't think it was as really positioning. I suspect the market has become a little immune, I suppose, to these ongoing sort of geopolitical risks that are really impacting energy markets at the moment. We've seen, certainly when you look back in time, an increasing diluted impact on oil prices due to these types of events. Back in the 70s, we saw long extended sort of price or impacts on prices, but those the longevity of those rallies seem to be getting shorter and shorter. And I think the market at the moment is assuming that this will be a relatively quick conflict and things will return to normal afterwards. But I think that's a fairly risky sort of position to take. I think the market's a lot more fragile than it has ever been coming into these types of events, and obviously the risks that we see this being extended, I think, is much higher than we've seen in the past.
Daniel, is this complacency by markets that you're alluding to also perhaps why we're seeing gold even amid these risks, struggling to top the peak that we saw in January on spot, which was roughly around 54.20.
Yeah, I think that's playing its part, although, gold's got other issues, it's facing as well. And, the obviously the concern around, what inflation or how inflation is impacted, I suppose, by these elevated energy prices, whether that changes the tune at the Fed and other sort of central banks. So, that's something which, gold investors are obviously contemplating in their heads at the moment. But, I do think it underlines how the market is viewing the risks at the moment. And so, just as per the comments on oil, I think, gold investors, are taking a similar view. But I feel, the risks are certainly much more elevated than pricing seems to suggest at the moment.
Dan, always great to have you. That's Daniel Hynes, Senior Commodity Strategist at ANZ. Let's get some market calls that we've heard out of the Bloomberg Invest event in New York. Apollo CEO Mark Rowan is warning that the shakeout is coming when it comes to private credit firms due to rising defaults on loans to software companies. He says this is both foreseeable and predictable, stressing the importance of strong underwriting and risk management.
The entirety of the companies that you see that are public today, everyone was $40 billion in 2008.
Yeah.
We're now close to $1 trillion, Blackstone more, KKR a little less. This is not good management, or not solely good management. This is a function of structural change in our marketplace. And that structural change is continuing, and the reward for good work is actually more work. In our case, it's managing more money. And I think that is where we're heading. I think this will be a shakeout. I don't think it is going to be short term.
And Soros Fund Management says investors in both private credit and private equity face a painful 18 to 24 months. CIO Don Fitzpatrick told us that the AI risk and conflict in the Middle East will weigh on markets.
The realization that investors are coming to now is this is not going to be a couple-day event. This is going to be really, really hard. And I just think market participants are dealing with an enormous amount of uncertainty.
More ahead on the Asia trade. This is Bloomberg.
Now, with the geopolitical events that we talked about, I just need to see. We need to get a lot more data in. Right now, it's just too soon to know what imprint this has on inflation and for how long.
Minneapolis Fed President Neil Kashkari at the Bloomberg Invest event in New York. And of course, energy prices are front and center, and the impact potentially on inflation. That is a concern. We are seeing yields, though, trend lower in cash trading, as are stock futures pointing declines on a day where the dollar is more or less moving sideways on the Bloomberg Dollar Index. And against this backdrop, the biggest contest so far of the U.S. 2026 midterm election cycle is underway, with voters in Texas making their choices in a statewide primary. The vote could determine whether Democrats have a shot at narrowing the gap with Republicans in the Senate come November. Let's bring in Bloomberg's Texas bureau chief, Julie Fine. So, Julie, polls set to close soon. What do we know so far?
Polls are set to close in most parts of the state in 20 minutes. However, in Texas, one city, El Paso, is in a different time zone. So it's another hour and 20 minutes until the polls close there. So we really won't know until after that, even any type of trends in this race. We will see the early vote counts, but it could take some time before all the votes are counted in Texas this evening. It could go early in the morning because these are expected to be close primaries.
There's a new rule about polling locations that seems to be causing some consternation.
Yes, there is some problems in Dallas. There is a new rule here in Dallas County. What happened is both parties generally used to run the elections together. The Republicans decided this time around they wanted their own primary. Because they separated the primaries, On voting day, people in Dallas County must go to their home location. And the last several elections, they could vote anywhere they want in Dallas County. So there was a lot of confusion today. Some people didn't know about the vote change. There was an injunction that was filed just a short time ago. Polls will now be open 2 hours longer this evening, which could delay votes even further.
We've got Republicans weighing how much they support President Trump's agenda, Democrats weighing how they can put up the opposition, right? How do we see the domestic issues at play here and the international issues with, of course, the war in the Middle East looming large?
Well, the war in the Middle East began after early voting ended here in Texas. Many people vote here in early voting. There are 11 days of it, so we don't yet know. We should find out possibly from some exit polling if that affected how people vote in the primary.
Julie, what do we know about the runoff likelihood, very quickly, if you can?
Very quickly, it is extremely likely that the Republicans will have a runoff in this election. It is expected that it could be between Ken Paxton and the incumbent Senator John Cornyn. That is extremely likely.
Bloomberg Texas Bureau Chief Julie Fine there. Well, the Texas primaries will test President Trump's clout with Republican voters as his administration prepares for the midterms while managing its latest military incursion in the Middle East.
I thought we were going to have a situation where we were going to be attacked. They were getting ready to attack Israel. They were getting ready to attack others. You're seeing that right now. And a lot of those missiles that are hitting in, those are stationary. Those were aimed there for a long period of time at these other countries. So I think I was right about that. We attacked first. And if we didn't, it could have been, you know, look, we're really decimating them. They're being decimated. And if we didn't, and by the way, we have massive amounts of ammunition.
Joining us now is Michael Shoebridge. He's a founder and director of Strategic Analysis Australia. He previously served as Australia's senior defence policy official in the Australian Embassy in Washington. Michael, great to have you with us. And of course, the latest assurances that we've heard from President Trump for oil markets, at least, seem to have more or less the intended effect. Of course, not a great deal of detail in terms of how this would actually be executed. But what do you make of, I guess, the strategic and operational planning at play here for this next phase of the conflict? Because he's not ruling out having ground troops at all. He's not ruling out wanting complete regime change. At the same time, recognising that a change in leadership could be more of the same or even those taking on a harder line.
Well, Heidi, the political goals remain unclear. You're right, all the way from leaving the regime in place but having more pragmatic people to deal with to a complete change of government inside Iran. But the military goals, at least narrowly, look much clearer. So destroying Iran's missile stocks, ability to fire missiles at Israel, American forces in the Gulf states, destroying its navy, and destroying a lot of its government and military facilities. And that intense targeting of Iranian missiles, military and government sites can go on for some weeks yet.
President Trump also reiterated his justification for launching the attack on Iran, which surprised many, including allies of the US, right, saying that a nuclear war was imminent. The head of the UN's nuclear watchdog has said that there's no evidence to suggest that is true. What do you make of that, as, you know, particularly from the perspective of allies looking to, you know, give their support or perhaps remain on the sidelines?
Well, I think allied capitals are all on the back foot and quite confused. Unlike, say, the second Iraq war, the big Gulf War, there was a lot of consultation of with allies and partners and internationally before that conflict. This, allies are much more blindsided and trying to play catch up. But the nuclear claims look a bit overstated because Iran's program had been set back. There's no credible evidence they were close to a weapon. The administration, US administration, is still giving different justifications. But we're right in the early days of what could be a war that might last for some time.
Michael, aside from what we know or don't know about Iran's nuclear assets, what about its weaponry and its use of drones amid this fight. How do you think this is going to be playing out in the near term?
Well, in the near term, I think we've seen a pattern emerge already where the Iranian government is clearly fractured, but it's still able to launch missiles and drones in combination at targets from Cyprus to Israel, Saudi Arabia, and the Gulf states. And it looks like it can keep doing that. And the weapon that's most effective is the Shahed drone, the slower moving small aircraft that's hit things like the US Embassy in Saudi Arabia and oil storage in Oman.
And what do we know about the math when it comes to its weaponry for Iran? I mean, I know it's a bit of an impossible question, but that does inform the extent in which we can see this dragging on for at a time where these cheaper Iranian drones are being used against much more expensive Patriot weapons from the US.
Well, exactly. I think that's an excellent point. The economics favor drones over the expensive defensive systems. So the high-end US counter missile systems like Patriot and THAAD cost millions of dollars per missile, and you've got to fire a couple of those to hit an incoming missile. The Iranian drones cost about $30,000 each. They can make hundreds a day, and they can be launched from small vehicles and ramps. So the economics favor drones over traditional systems. And then the critical thing is how quickly will the Gulf states and the Americans start to run short of their interceptor systems?
You've said probably a few weeks, but ultimately the US and its allies would want a relatively quick way to wrap this up. If it doesn't, if it is extended, how much concern is there for security pacts and allies in the Asia-Pacific if the distraction becomes more of an ongoing one? Does that call into question levels of defence spending and budgeting for countries like Australia?
Absolutely. I think that the problem is that high-end, intense campaigns like we're seeing now from Israel and the US can't last for long. And if the Iranians just bunker down and wait it out, they can stay in control and still cause a major threat to the countries around them. That's the worst case. But really, like Hamas, they only have to climb out of the rubble at the end and say, we're here, for it to look like a victory. And every other country is watching this conflict after the war in Ukraine, and we're realizing the lessons about drone warfare and missile warfare need to be learned much faster.
Michael, do you think this is a forever war?
Well, I think it's very hard to see it tied up with a bow and over inside a few weeks, unless the Iranian government collapses. And then the forever part of it is what happens next in Iran, because it's quite clear that the US government doesn't want a major ground presence like we've seen in Afghanistan and Iraq, but there are still long-term consequences, even if it looks like the initial part of the war goes well. So it could be a short, intense war, but with a very long tail.
Michael, what's been interesting to me is also perhaps the lack of mention of the use of Chinese weaponry amid this conflict versus global conflicts that we've been seeing in the past year. Do you get a sense that, China might be supplying any sort of weaponry to Iranians, or at least when it comes to dual use and drones?
The Iranians are a center of drone expertise themselves. So the Russians are producing a copy of an Iranian drone, the Shahed drone we've been talking about, and they've been using that in large numbers against Ukraine. Ironically, the Americans have reverse engineered an Iranian drone, the Shahed, and called it the Lucas, and they're using it against Iran, but in small numbers. So I don't think drone technology is a big need the Iranians have from China. There were rumors that the Chinese were going to sell a really advanced anti-ship missile to the Iranians, but it looks like that was all left too late. China's weapons have not played a big role in the Iranian arsenal so far.
Michael, really great to have you with us. Michael Shoebridge, founder and director of Strategic Analysis Australia. More ahead on the Asia trade. This is Bloomberg.
It's another day of selling in the early goings for Asia stocks. Nikkei extending those declines from a day ago, 2% down. And for the moment, it looks like some of that selling is quite broad-based. You're seeing it reflected in the topics as well. On the South Korean gauge, a bit hard to decipher the movers. It was interesting. Maybe we saw a bit of reprieve for the chip making losses, but it looks like another extension of the Tuesday selling at a time where the currency is also facing immense pressure. This is not great setup for the open of Greater China markets. We'll track the opens next. This is Bloomberg.